Good evening. This is Rodney with the Triton Wave Market Outlook for Friday, November 9th, 2012. All right, let's take a look at the post-election results. This whole area over here, the area that I call the Ben Draghi crown, named after Ben Bernanke and Mario Draghi. Left shoulder, this first candle is the infusion of capital by Bernanke. This one is Mario Draghi. Sorry, I forgot his name for a second. Okay, so this is the whole head. This is the right shoulder. Post-election, we took out the shoulder, we took out the neck, and now we're down to this trend line, which I just marked off as a parallel to this major trend line going back to June. And I took half of it and then doubled it on the downside, took half of that, and now we're down substantially, almost, I think, 40 points on the S&P. Let me see, 26 to about 40 points, maybe a little bit more, almost 50 points. So the first line in the sand is right where these line of tops are, where the 233 ends up, and this parallel equal trend line right here. So any bump, right now it is 8:15 Central Time. S&Ps are up 325, kind of like a relief thing. Kind of like a relief rally. I was hoping for a short back up into 1386, but it didn't happen. I mean, a short squeeze, not a short. And it didn't happen, so maybe with any kind of economic news tomorrow morning, we can get it going. If it goes up there first thing in the morning, it's shortable right at the open. This thing is coming down as quickly as possible, and if you want to participate in the short side buying puts, my immediate target is 1365, and before there's any kind of a bounce, short of, like news, different bounce in the morning, and then down to the 377, which is 1330. I doubt very seriously that would go back up to this major trend line of 1400. Anything is possible, but you can start shorting right about at the, if it moves back up, you can start shorting at the 8-period moving average, which is about 1392, which is still 15 points away. If it goes up to the 1400, you can add to shorts. Your line in the sand is 1406 area. If it goes up to the 21, I don't think you can get up there. There's too much fear in the market. Also, this attempt, if you notice, if we move these off to the side here, this was ready to roll over before. You see the top, the double top right here, it was already starting to roll over when this announcement of infusion into the market came. So since the whole world took part in this, including Japan and China, this is basically a done deal. There's no more money to come back into the market. There's no more QE4, QE5 to save the market, to save the politics, to save jobs and all that stuff. They're just going to let it do what it's going to do and give the policy that they have in place a chance to work. All right, so in plays during the day, I usually have been looking at the 1597, but in this case they were usually 830. This is the 830 hash mark of today, and usually it only takes up a third of the screen, a third of this area here. So there was lots of activity today. You can see that this move back right here should easily hit 1385, which is, well, that's not much. That's like that'll be 900 or 1,000 in the morning. And over here, that would be the 144 exponential moving average. So actually, that might work out really nicely right there. But again, it's immediately shortable. So the 1597 is kind of like dribbling sideways. It did come down here. It did make its move on the downside at 902, and then you could have covered it right here on the downside, or just ridden it out because it was already down below zero on T5, and the daily has been down. So any move to the downside is shortable. Again, it moved down here after going somewhat sideways, and then came back up, and again it moved down here. So you just have to pick your spots. It's a little bit easier to see. On such a busy day, you can move to the 4181 right here, which is down right about at 922, a little bit later. And then you just roll the waves, one into the next, into the next, into the next. And as long as they're below zero, you're staying in it. I did think there was going to be a short squeeze. I did think that there was going to be some short covering in the afternoon. So it looked like it here when this went down and immediately came up. I thought it was going to extend to the 377 and just go through it a little bit, but it actually rolled over and came right down again. And you can only see this on the shorter time frame ones of 987. All right, I am going to do. All right, I pulled up Apple here because I wanted to show you the anatomy of a trade using the Triton waves. All right, first of all, on a broad scale, the waves showed a sell, an all-out sell on Apple Computer on October 4th. The price on the stock was 670. I've noted it in previous videos. It's right now 535 with a low of 537 with a low of 535. It's 135 points. So the waves came through in spectacular fashion, and T1 rolled into T2 below zero, rolled into T3, T4, and now T5 the last few days. So no stock ever goes straight down. Don't be surprised if there's some kind of a kickback. In Apple, we may have, I've noted in past videos that it tends to go down to the next exponential moving average, go sideways, go down, go sideways, go down, go sideways, go down. So this is right now heading, looks like it's heading for 514, but there's this little glitch here there's a low here in last May of 529. So it might just head for 529 and take off for a while, like 20 or 30 points. You might see that in one day, and all the news is going to say Apple's on a rally mode. It's starting to recover. Don't believe a word of it. It's not going to happen. On a daily, so the anatomy of a trade. First, I noted that the daily was down. So now I'm looking for a short on Apple. So this is yesterday's trade. Today is Thursday, so this happened on Wednesday, excuse me, at 11 o'clock in the morning, and I'm using the 987 tick chart on Apple. And I noticed that a little bit earlier, 10:22, the stock starts going below zero, but even more importantly, it comes up, it's been riding the crest of the bottom side of the 377 exponential moving average. So you got to spread out the exponential moving averages like I do on the left-hand side here, and you got to pick the one that best represents that stock on on at least a month or 6 weeks basis, because they all change up. It's just a matter of observation. So it came up against the crest of that 377. I noticed it was below zero. I bought some out of the money puts at 580. So they were 6 points out of the money with basically a week and a half to go. But it was but it had already broken the 233 exponential moving average. So I knew it had to come all the way down to, I knew there was a chance it could come down to 513. So as long as the waves are riding, 1 rolled into 2, rolled into 3, I kept it, I kept it, I kept it, and now 5. So even though T1 rode above 0, and you can get out if you're cautious, T2 rode above 0, T3 rode above 0, I stayed in because T5 was below 0, and the major trend on Apple daily was well below 0. I stayed in. When it started nipping here at about 11 o'clock, I thought there was going to be maybe a short covering to the upside, so I bailed on it. So I ended up capturing between 587 and 547. So I captured 40 points in a 24-hour period. It came out to a 272% gain. That's not including the initial position. So it was absolutely beautiful. That's what I did for this downturn on Apple and the market. That's where my concentration was. Okay, I also like Amazon to the downside. I was hoping for a little bit of a hiccup back up to 236, but it didn't happen. And then the 21 started caving over. I think I have this in a 610 chart. Not much that you can tell there, except for the fact that it actually started rolling over at the end of the day or near around noontime, right about here. So it's the start of something that's going to happen. Already on the daily, on the left-hand chart here, T5 has gone below 0. Partly, and let's see here. T4 is sneaking below 0. T3 is almost below 0, and T1 and T2 are below. So not good for Amazon. So I think this is going to stair step down to about 210. So we have 17 more points to go before there's any serious buying. Could happen very quickly, or it could zigzag down like it has up. Actually, it's going to be faster on the downside, but it could come back up and rip your head off for about 12, 15 points. But that's why you have stops in place. Okay, Goldman Sachs. Looked like it was going up, and the daily, if you remember, I said that no matter how good it looks, counter trend trades are just, you have to take the trades as counter trend trades on the downside, because they're only good for like 3 or 4 points. Well, all of a sudden T1 is below 0 today on this trade. So just wait for a little kick rally back up to the cross here of the 8 and 21, which already did cross today. And it's the first cross since July. So the cross is a confirmation. It also, if you look at this closely, the 8 and the 21 zigzagged up here, and they both came up to, well, it's a new line that I put in. This purple line is the 377. This is the 610 exponential moving average. This is the 987 exponential moving average. So one of the things I look at is a dance that the 8 and the 21 do with each other around these critical moves. And you can see this came back up, kissed the 610 exponential moving average, and then kissed it again on a double high. And it wasn't, to me, it wasn't playable to the upside or the downside. It was just like a wait and see, and it confirmed today that this is going to be more than a 2 or 3 point move. It already has moved. We had to skip the first 9 points because it's set up for what's going to happen next. But there's no reason to believe that this is not going to come down at some point and hit 96. It may zigzag down there, but it's going to happen. So if you want to take a short position in the stock, that's fine. If you want to use options, be a little more cautious and use either the 5-minute on, let me see. You can either use the 5-minute when it starts rolling over. Right now it looks like it wants to go up a little bit, or you can use the 610 for some close plays. But the idea is that you're playing it to the downside and covering when these waves go above zero, and then wait for a setup for the downside again. Okay, Google is moving. God, Google's getting killed. Okay, so Google, this was the earnings, then 7, 8 trading days, 9 trading days sideways. So if it doubled its move down, but without the surprise of bad earnings, if it doubled its move down, it would take us down to 619. But it might zigzag down there. So use the 21 period or the 21 minute or the 5. Let's see what the 5-minute looks like here. You can use the 5-minute for some nice plays here. Back on November 2nd, right here, in the middle of the day at 1:55, it was 689 on T4, and then move back up here. 689 to 676. So nice moves in that. Okay, for those of you that are using the ABC waves, it's the same thing that I showed you on the Triton waves for 1597 on Apple. Here are the ABC waves. It's the same kind of move to the downside. These are comparisons. This is the Triton waves on the left, ABC waves on the right. They're both 1597 tick charts, and you can see when Apple moves down. Here you can cover or stay in, and you're using the C wave as an anchor. So if you have these, you can follow me. If you don't, I just want to tell you the 40-point move that I got out of these today was enough to completely pay for this indicator and a lot more. And that was one trade. These trades come up all the time. You're missing out if you don't have these. Good luck trading, and I'll see you at the next update.